You're required to prepare a statement showing working capital requirement if the company wants to make a provision for contingencies at the rate of 15% of net working capital. That is the question. So friends, in the B part of the question, we are required to compute the working capital. Working capital would be calculated as the difference between the current assets and current liabilities. We already have calculated current assets, stock, debtors, cash bank, and current liabilities of 9,75,000. Based on that, so we are required to compute the working capital. So let us answer the B part of the question. Sorry, before that, I forgot to prepare the cash and bank working note. Current ratio is equal to current assets upon current liabilities. Current ratio is 2.5. Current assets is consisting of stock, debtors, and cash bank. Divided by current liabilities, 9,75,000. So 2.5 into 9,75,000 minus stock minus debtors. So 2.5 into 9,75,000. That comes to 24,37,500. Minus stock. Amount of stock is 9,75,000. Minus the amount of the debtors. It is 7,50,000. So 24,37,500 minus 9,75,000 minus 7,50,000. That comes to 7,12,500. That is the way the cash and bank is calculated. Next, write down B part of the question answer. Calculation of working capital requirement. In that, there are three current assets that we have. The first is stock plus debtors plus cash and bank minus current liabilities. Difference of both of them is working capital plus margin for contingencies or provision for contingencies is one and the same. Amount of the stock is 9,75,000 plus amount of the debtors is 7,50,000. Amount of cash and bank is 7,12,500. So 975 plus 7,50,000 plus 7,12,500. That is 24,37,500. Minus 9,75,000. Plus margin for contingencies. So 9,75,000 is deducted. That comes to 14,62,500. plus it has been given that say margin for contingencies is 15%. So into 0.15, that is 219,375. Total of both of them is 16,81,875. This is the way so the working capital can be calculated. Revising the entire question. In the first working note, we have calculated GP, COGS. Based on that, so the fixed asset and stock. There was an important point which I told you. That's for the purpose of calculation of the fixed asset, we have to take COGS because it has been given to us in the question. Otherwise, generally we will take the sales. Next is the debtors using the collection period. Net worth using the fixed asset information. Then long-term debt, assuming that the preferential capital is 0. That is an assumption that we make because the capital gearing ratio is given. Then the net worth is split between reserves and surplus and share capital, 12 and 18 lakhs. Based on that, so the balance sheet is prepared. For cash and bank, we have prepared the working note later on, in which we have first of all calculated the current assets and current liabilities, and based on that, so the cash and bank. In my opinion, say this working note number 8 is very important, and I have found that so the students many a times commit mistake in that. B part of the question, working capital calculation. There is slightly a new question over here. In that, current assets minus current liabilities plus margin for contingencies. The term margin for contingencies stands for basically the company wants to know what is the working capital investment to be made in the business. Whatever the estimate that we have, to that say certain margin is added because our estimate may prove to be wrong. That is the reason. Accordingly, we compute the total working capital requirement.